When people talk about the market, they talk about either the Dow or the S&P 500. And the S&P 500 is a market cap weighted index. And what's interesting or fortunate and unfortunate about the crisis is it affects different companies differently. And the more dominant large cap companies, the stronger the balance sheet, the stronger the market position. Those businesses are huge beneficiaries of the crisis. And what the market does not reflect are small businesses, private companies, more levered businesses that don't have access to capital, don't have the same dominance as the public market. So a business like Amazon, which is a very big component of the market, is up 45%. That does a lot, obviously, for the averages. It's probably something approaching almost 10% of the S&P index today. My guess is 6-7 percentage points of the index. Businesses like Google, Facebook, I think long-term beneficiaries. And ultimately, the value of a business is the present value of the cash it generates over its life. And even if the cash flows are disrupted in the short term, if they're greater in the long term, the values will be higher. So I think the stock market is a snapshot of a portion of the economy. If you had an index of smaller businesses, the market would be down 50, 60, 70, 80%. The market is a discounting mechanism, and people's estimates of the future have been very volatile. How long is the crisis going to go on for? When will we get back to our normal life? These things affect the input of the model that analysts are using to value securities. I think the other issue is the market in the short term is very much a sentiment index. It's a way for people to express their emotions. And there's been a lot of emotions in the short term. And when that happens, there's a corresponding degree of volatility. But I don't think the market is dramatically wrong. When you look at the market on a company by company basis, when we look at the companies we own, different businesses have been affected differently. Many businesses will be long-term beneficiaries. If you think about the country as a business, the country has a lot of intrinsic value, a lot of asset value. I would say one of the most valuable assets of the country is the country owns 35% of your income and my income. In a way, you can think about that. That's the current level of taxation, federal taxation. So that's, in effect, the country owns a 35% stake in your intrinsic value and my intrinsic value as a contributor to the economy, and the country retains the right to change that percentage ownership at its will by in fact changing obviously tax policy. So then of course we have enormous assets, whether they're real estate assets or infrastructure assets, that are. So I think the asset side of the U.S. balance sheet is very, very large. Obviously, you never want to let the liability side of the balance sheet grow too much, and there are a lot of not just debt liabilities we have outstanding, but we have Social Security, the enormous healthcare costs, Medicare, Medicaid, et cetera, that we bear as a country. So it's something that is concerning. We are fortunate finding ourselves in a very low interest rate environment, but it's something to think about and be concerned about. But it's sort of difficult to do the same kind of calculation of the leverage nature of the United States unless you do a proper valuation of the asset side of the balance sheet. I think we're going to begin a recovery certainly by year end. I don't think we'll be back to anything close to a normal economy until probably the second half of 2021. I think if we have an early vaccine, if Pfizer's been talking about a potential distributable vaccine by the fall, that will obviously make an enormous difference. I think if we can reduce the treatment of the virus to, one test you can take at home and get an accurate result in 15 minutes, and it's telemedicine to your doctor to get, for the doctor to say, okay, you need a prescription for remdesivir in a inhaler format, and you can stay home for 2 weeks and be fine. Those things will make a fairly significant, positive impact. But I think we've had kind of a sloppy closure of the country for the virus, and we're having a bit of a sloppy opening. So I think you're not going to have business confidence return and consumer confidence return until the kind of people feel safe, truly safe. If I had to guess, that's really more like the second half of next year, and into the beginnings in Q4 and Q1 and Q2 of next year. Again, all the things which will temper the economic recovery, but I do see a kind of gradual improvement in all fronts as the global healthcare system, every medical researcher in the world basically working on solving one problem, and a lot of resources going into it. So I think I think by the fall we'll feel a lot better if we can take death off the table. If we can take severe illness off the table, I think that's certainly possible in this calendar year. People are going to feel a lot better about living and going out and living a more normal life. Look, I think we have to protect the most vulnerable people economically during this period of time, and I don't know when do these programs precisely run out. You need to design programs. I've heard, and we've made a lot of investments in the restaurant industry, where some of the benefits are at a level where they're better than $15 per hour, sort of the minimum entry points for many private businesses, and it discourages people returning to work. So you need to design them in such a way that you don't reduce economic incentives to return to work, but you have to have them large enough to protect people during one of the more challenging times, particularly for people at the lower end of the economic scale. I've always liked to say that success is not a straight line up, and I would give these talks at business schools about how to deal with failure, and then I failed. And I had to implement the strategy that I was a proponent of to business school students. But I think the key, look, we have a business with a strategy that makes sense. We made some mistakes. Experience is learning from those mistakes. That's the key. And then, I was quite confident that if we adhered to the principles that built the success of the firm, or re-adhered, if you will, that we return to success. And it's just it's a question of duration and every day coming into the office and making decisions with good judgment and being level-headed. And with time, I was confident that things would recover, and feel very fortunate that things have worked out the way that we expected. But I'm certainly going to be, now at 54, I'm done making mistakes. So that's my business plan going forward. We're going to be very, very watchful about veering from the course that has led to our success.